When we talk about leverage trading, most people zoom in on one thing, what stock to buy. But what if I told you the real key to success isn't your pick, but your own behavior? Today, we're going to decode the behavioral blueprint that separates the winners from the losers. And trust me, this isn't about some secret market formula. It's all about mastering yourself.
Just let that one sink in for a second. Seriously, this single idea right here is the foundation for everything we're about to unpack. You could be the smartest analyst in the world with the best charts and the best info, but without rock-solid discipline, leverage will find every single crack in your process and blow it wide open. It's a tool that pays for structure, not just for being smart. And well, here's the hard truth. The data does not lie. The overwhelming majority of retail traders in the F&O market lose money. But why is that? It's not because they were just unlucky or that the market was being crazy. Nope. It's because when their own money is on the line and the screen starts flashing red, all those great plans they had just crumble under the pressure of pure emotion.
So, to really get a handle on this, we're going to tell a little story. It's a story about two different traders. Now, they both have access to the same market, the same tools, they see the exact same charts. But inside, their mental operating systems are worlds apart. And that one difference? It decides everything. Okay, let's meet our two characters. On one side, we have the engineer, and on the other, the gambler. The engineer is methodical, clinical, almost like a robot. They are completely obsessed with their process, and their number one goal is just to survive. The gambler? Oh, they're riding a roller coaster of gut feelings and emotions. They're in it for the thrill, for that quick win. One of these traders slowly builds wealth. The other one? Well, they become a cautionary tale. Let's see how it all plays out. Everything, and I mean everything, starts right here. Before you even place a single trade, the battle is already won or lost in your mind. It all boils down to one fundamental choice. Are you in this to get rich quick, or are you in this to stay in the game long enough to actually win? This right here, this is the engineer's mantra. Notice it's not, my first job is to double my money. No. It is, my first job is to make damn sure I can trade again tomorrow. They treat their capital like a soldier treats their weapon. It is the one thing you must protect above all else, because without it, you are completely out of the fight. And look, this isn't just some nice-sounding philosophy. It is a hard mathematical rule. This number is the engineer's survival code. By making sure they never, ever risk more than 1 to 2% of their total capital on any single trade, they make it almost mathematically impossible to get wiped out. A few losses in a row? It's just a scratch, not a fatal blow. Now let's peek inside the gambler's head. They live on incredibly dangerous words like cannot, must, or obviously. But that's not analysis, is it? That's just ego. The second you start believing the market owes you something, or that it can't possibly go any lower, you've just set a massive trap for yourself. Because the market can, and it absolutely will, do anything it wants. And that leads us to maybe the single most important skill in all of trading: loss acceptance. You see, the engineer just accepts that being wrong is a normal part of the business. A small loss is just feedback from the market. The gambler, though, they tie their ego to every single position. So for them, taking a loss feels personal, like a failure. So they hold on, hoping, turning what should have been a small, manageable loss into a portfolio-killing disaster. You gotta remember this. Being wrong is gonna happen. Staying wrong, that is a choice. All right, so you've got the right, that's great. But a brilliant plan is totally useless if you can't actually execute it when the pressure is on. This is where it all happens, in the heat of the live market, when every single tick of the price is testing your willpower. Oh man, we've all felt this one. The trade starts moving against you, it's racing towards your stop loss, and that little voice in your head starts screaming, just move it, come on, give it a little more room, it's gonna turn around. The gambler listens to that voice. And that single action, breaking a rule you set beforehand based on nothing but hope, that's the start of a very, very painful spiral. The engineer, on the other hand, is totally immune to that temptation. And you know why? Because all the hard work was already done. The entry price, the stop loss, and the profit target were all figured out before the trade was ever put on. When the trade is live, they're not making decisions anymore. They're just an executor. They're just following the plan. There's no emotion, no second guessing, just execution. And this chart really shows you everything. Look at how they use their most powerful tool. The gambler uses leverage like a sledgehammer all the time on every single idea. They're just addicted to the action.
The engineer, though, uses leverage like a surgeon's scalpel, very selectively, with extreme precision, and only when the conditions are just right. They know that sometimes the most profitable trade is no trade at all. Okay, let's talk about the part that most people completely ignore. What happens after the trade is over? It doesn't matter if you just booked a huge winner or took a really painful loss. This moment right here is a psychological minefield where your very next big mistake is usually born.
So when the engineer has a winning trade, they don't get greedy. They get defensive. They immediately switch into profit protection mode. What does that mean? Well, they'll take some money off the table, and then they'll move their stop loss up so that at the very least, they can't lose money on the trade anymore. The goal is to turn a winning position into a risk-free one, and then just let the market do the rest.
The gambler's reaction after a loss, it's completely different. It's primal. They feel like the market personally attacked them. And that anger leads to probably the most destructive behavior you can have, revenge trading. They jump right back in, usually with even bigger size, not because there's a good setup, but because they have this desperate emotional need to win back what they lost. That's not trading. That's just gambling.
This is so important. Look at how they review what happened. After a losing streak, the gambler is just staring at their P&L, agonizing over the money they lost. But the engineer, they do a self-audit. They open their trading journal and they ask one very simple question. Did I follow my plan perfectly? If the answer is yes, then the losses are just an accepted cost of doing business. You see, they focus on the process, not on the random outcome of any one trade. So there we have it. We've walked down the two different paths. We've seen the mindset, the execution, and what happens after the trade. Now let's put it all together. Let's lay out the final, clear blueprint that separates long-term success from a quick, inevitable flameout. This table right here, it really just brings it all home. Just look at the difference. The gambler ignores risk, runs away from small losses, gets super greedy with their winners, and is driven by emotion. The engineer is the complete opposite. They are obsessed with risk. They accept small losses as normal. They protect their profits like a hawk, and they are relentlessly, almost boringly rule-based. Their focus isn't the money. It's the process.
And that brings us right back to where we started. This is it. This is the golden rule. It's the ultimate takeaway. The market is a battlefield, and leverage is a weapon that magnifies everything, your strengths and your weaknesses. It doesn't care about your IQ score. It only, and I mean only, rewards your ability to follow a disciplined process, day after day, especially on the days you really don't feel like it.
So I'm going to leave you with one final, and I think a critical question to ask yourself. When you really look at your own trading, at the decisions you make when you're under pressure, is your behavior helping you win, or is it the very thing that's holding you back? Because in the high-stakes game of leverage, your behavior is either your greatest asset or your most fatal flaw, and the choice of which one it's going to be, well, that's entirely up to you.